Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. Here are a few images from my life in a village in Thailand. These images are available on my website superiorprofitco.co under the images page. Greetings, I am Sagar Nandi, active trader in multiple markets. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use only Q for my trading. It runs on Metastock and TradeStation platforms. Let's start with the instruments that often move the market. Instead of dollar index DXY, I came to UUP, the ETF, because that is what I used for last several market ETFs. See the beauty of Q systems and the effectiveness with which you may anticipate a move. When dollar index was here long ago, I anticipated based on the bullish indecision cluster that it would go up. It did go up. I anticipated that from the yellow direction line it could come down. It did come down but created a higher low and went up. Notice the bullish indecision cluster at the bottom that led to an up move, and when the bearish indecision cluster came at the high, I anticipated that it would come down but create a higher low. Then came the bullish indecision cluster again. So I reaffirmed my analysis that it would probably create a higher low and go up. Then on this day came the comments made by Fed chairman, and UUP sharply dropped but maintained the previous low. And soon after that, the trendline support formed. Trendline resistances are also there, but the anticipation is working out well so far that it has created a higher low and it has not breached that. Is it uptrending now or downtrending now? That's a trick question. It is doing neither. It is moving inside a very narrow range. And when it is inside a squeeze like that, it may move in either direction. If it moves to the upside, that will be bullish for UUP, probably bearish for the market, and if it comes down, it will be bearish for UUP, probably bullish for the market. I didn't look at these instruments beforehand. Let's quickly change it to weekly interval. On Metastock, if you are on daily interval, you may use the hotkey Alt down arrow. That's what I used. So you will see the periods here, intervals here. After daily comes weekly. So if you use Alt down arrow, it goes from daily to weekly. Similarly, if you are on a 5-minute chart, you want to go to 10-minute, you press Alt down arrow. If from 10-minute you want to go to 5-minute, you press Alt up arrow. So Alt and up down keys on the arrows move interval across these values. So I came to weekly and it is also moving inside a range. Now I see it has multiple trend line resistances. So in the longer term weekly, probably it is continuing to have bearish pressure over longer term. But in the near term, it is moving inside a squeeze, the same thing that we saw in the daily interval. So it is inversely correlated. I'm going back to the daily interval by pressing Alt up arrow. Though it is usually inversely correlated with the market, that correlation does not always work. On the other hand, what is correlated very much with the market, not inverse correlated, but correlated very much, positive correlation with the market, is the mega cap custom index. Moves some pockets like QQQ, SPY more than others, but has an impact on the market overall. And what mega cap custom index is doing, if you look at the weekly, let us look at the weekly for the time being, not look at the daily. If this was any stock, would you buy this stock? I wouldn't. If we are using Q techniques, we wouldn't, because it has a bearish headwind and it has bearish indecision cluster, and it is not moving up or down. It's moving up, down, zigzag, outperforming, then underperforming, then outperforming again, then underperforming again. It will not give us a confidence to buy a stock like that. In the daily also, it is showing multiple bearish indecision cluster slightly going up, but practically you may say it is moving sideways. Neither daily nor weekly is showing any conviction to buy this instrument. At the same time, it is not giving any bearish signal also. And here again, I'll repeat what I said in the last market recap, several of them. That will be the theme in this week's session also, that will show the power of these trend lines. The trend lines are continuing to hold and it will not be easy to short unless the trend line support is broken. Holding very well so far. After the instruments that often move the market, let's look at Q market breadth internal health check. Why I look at it is because the market follows the internal health, not the other way around. Are those always in sync, market and internal health? No. If they are in sync, I am happy to trade in that direction. If there is a divergence, then eventually the market will follow the internal health, not the other way around. Is there a divergence now? Divergence now? Yes, absolutely. Again, I didn't look at the market breadth charts, didn't have time to do that. Let's look at that. I'll show you the divergence from some other angles. This is the market breadth total view. The broadest view of the market. It is continuing to drift upward. What is continuing to drift upward? The total view custom index. Interestingly, if you notice carefully, the percentage of stocks above 50-day moving average and also the percentage of stocks above 200-day moving average. We have the labels here, the yellow and white direction lines, both actually tilted down, though the custom index itself is slowly going up. What is the reason? We know because this custom index is also affected by the mega caps. So the conclusion is mega cap, very large cap, probably only mega caps are pulling the market higher. Internally, it is actually weakening. Is it weakening a lot? No, not in aggregate level. It's not weakening a lot, but it is weakening, and that is a divergence. If we want to see what is doing better now, relatively, growth versus value, for last couple of days, last week for example, overall, growth is doing better. Small cap versus large cap is zigzagging, no clear trend. So growth is at least doing better. If I look back, we see the confirmed Hindenburgs. Another Hindenburg came here. In between came an accumulation count of 4 with Eureka signal. Very unusual to have Eureka after confirmed Hindenburg. Then we had another confirmed Hindenburg, and on Thursday we had irrational exuberance. Bingo, bango, 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 bingo, bango, bongo. This is bango. Easier to remember probably as irrational exuberance that comes at the top. That came on Thursday. Friday, market was quite weak, though mega caps hid that from QQQ. We'll look at that shortly. So this irrational exuberance, Hindenburg, Eureka coming at an unusual spot is not giving me enough confidence to buy. At the same time, if I look at it using the weekly daily, look at what? Look at total view custom index. I'll continue with the same comment as before. For past several weeks, I am making that comment that it will not be easy to short unless these trendline supports are broken. However, we keep in mind the fact that this custom index total view is also heavily influenced by mega caps. Not every stock is doing well. We already saw that because percentage of stocks above 50-day moving average, percentage of stocks above 200-day moving average actually came down. I'll not look at the other breadth charts for now. Let's see what comes next. What comes next is the external view, not the internal health, but external view of the market. We'll again see a disconnect here between mega caps and others. SPY, quite influenced by mega caps, sharply went up, made a new all-time high for the week. Thursday had a very large bullish move driven by mega caps. Mega caps did very well on Thursday. Friday we have a bearish indecision at the top. At the same time, the same theme applies. It will not be easy to short SPY because there are successive trendline supports. Is it in an uptrend? Absolutely. Does it have trendline support? Yes. Is there any trendline resistance? No, it is not possible to have trendline resistance if it is clearly uptrending. Is it overbought? Yes. Is it above upper boundary? True. Is it overbought in terms of stretch? Yes. Is jump nearing extreme overbought condition? Yes. So it is risky to buy, especially stocks that are going up like a rocket. I shorted a few of them. I shared some of them on my Indian WhatsApp group. I shared some of them earlier in my YouTube videos, in market recaps, also on Twitter. I look at some of them. I shorted and I quickly made a nice profit. But for holding, shorting and holding, it is not easy to do that because of the trendline supports. QQQ is of course more heavily influenced than SPY, that also made a new all-time high. More influenced by megacaps than SPY, made a new all-time high. It was underperforming earlier for some time and now it started to outperform. That led QQQ to make a new all-time high, not only on Thursday and another one on Friday too. It is also overbought. Again, it will not be easy to short anytime soon because of the trendline supports. Next dia. For the week, it made a new all-time high. Thursday, across the board, the market went up, but Friday here, we have bear release signal and a bearish shape candle. But that is only one day. We had those days before also. Is it uptrending? Clearly, this one day drops doesn't mean anything about the trend change. It is clearly in an uptrend, and again, unless the trend line supports are broken, it will not be easy to short. Short and hold for any meaningful duration. If you short and come out quickly, that is a different thing. But DIA, interestingly, is not possible to short. Why I say interestingly? Because DIA is not market cap weighted. It still went up, made a new all-time high for the week. IWM, very close to making an all-time high. However, here the weekly daily is not looking so bullish. Weekly has both bearish headwind, I never ignored that, as well as bearish indecision. The candle shape is not bullish at all like QQQ or SPY. And this is one case where even the daily on Friday has a bearish headwind. Here the support is far enough away, trendline support, for me to consider shorting small cap stocks. So if I am thinking of shorting anything, I'd like to short the underperforming instrument, and IWM is clearly underperforming in weekly daily both. Support is far away. Here shorting is at least feasible. It was not feasible for the other market ETFs. Let's look at the equal weighted QQQ and SPY. This is equal weighted SPY RSP. Here we see, is it downtrending in daily? No, clearly no. Again, it will not be easy to short unless the trendline supports are broken. But in weekly, we had a bearish headwind earlier and it did not make a new all-time high. That also shows that the strength of SPY is driven by mega caps. Equal weighted SPY, that is RSP here, is not doing as good. Not doing as good, but it is clearly in an uptrend. And QQQE, equal weighted QQQ, is doing very poorly, in fact. Far from, okay, relatively, of course. Very poorly means, is it in a downtrend? No. At worst, it is sideways. It's not in a downtrend, but it is far from making a new all-time high. And more importantly, on this week, quite a number of weeks ago, 1, 2, 3, 4, 5, 6, 7 weeks ago, it dropped sharply. When the backdrop color turned bearish, it is remaining bearish for these 7 weeks in a row. And we can see the relative performance coming down all along. So equal weighted QQQE is severely underperforming. That again shows the market is being lifted up by the mega caps. And if I may add what I said earlier, market is being lifted up also by the whipsaw or flip-flop of one category of stocks going up one day, coming down next day, and the other category is doing exactly opposite, helping to lift the market up, though there may be selling going on under the hood. That was a look at the external view of the market. I'll come to some mega cap stock that I shorted successfully. I shared it in a WhatsApp group, but I'll come back to that later. Let's look at the market more with QEdge, which has bucket analysis. Thanks to Dr. Jeffrey Scott. After watching whose videos, I incorporated it and made it 100% live. And it is always running on one of my monitors during market hours. Pinpoints reversals with unbelievable accuracy, though there is no reversal signal now, as we will find out. And it has sector industry stock breadth too, shows where the market came from, where it is now, where it may go next. And that will show gradual deterioration in the market, which is hidden in the market ETF charts. Bucket analysis first. 54% of stocks are above mid Bollinger Band. That is bullish, but compared to Thursday, we see a huge drop from 71% to 54%. That is much more than 10% drop in one day. That is not insignificant by any means. Huge number of stocks came down from above upper Bollinger Band to below mid Bollinger Band. Quite a number of stocks. Still remaining bullish though, but deteriorated, and there is no signal from bucket analysis because it's neither overbought and it cannot be oversold when it is still bullish. If we look at the sector industry stock breadth across multiple periods, this is what I showed in the last market recap also. If I remember, it was already starting to deteriorate, become more and more weak. That is continuing. 1 month is still bullish, but 10-day period, still long term, has turned bearish now. This week 5-day period is more bearish. There was some bullishness on Thursday that led the 2-day period to become bullish, but one day severely turned down again. Stock level is the most granular, from 63% up on Thursday, Friday together 2-day period. On Friday it became 82% down, the most granular level, and the other levels also deteriorated or remained the same. In any case, from longer term to medium term to current period, it is deteriorating. While QQQ, SPY, DIA are making new all-time highs and IWM not coming down. So there is a disconnect, clear disconnect in the market that is not giving me confidence to buy. Lastly, another breadth insight from QFinder, technical breadth. We only profit by buying stocks going up or shorting stocks coming down for directional trades. Technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. Weekly technical breadth. Now it is bearish overall. Reversals are most bearish, and there is one useful signal, breadth level signal, bearish headwind in the weekly interval. More often than not, much more often than not, this bearish headwind in the weekly interval at a market top leads to decline ahead. Crash ahead? No. Decline ahead? Likely. Crash ahead? I don't know. That's what I meant. Decline ahead? Likely. But again, the trend line supports are not making it easy to short. Daily interval. Again, QQQ and SPY are very much hiding the weakness in the market. On Friday, we saw sector industry stock breadth 1-day period was very bearish, and when I ran QFinder, the red color, prevalence of red color in technical breadth even surprised me. 80 to 99% in these 4 buckets. All strength, continuation, reversal are bearish. 80 to 99, that is huge bearishness. And like in the weekly interval, daily interval, technical breadth inside also shows a bearish headwind. I will not ignore that. Market level summary then. The most important trading decision is whether and where to buy or short, or whether to stand aside. I'd like to stand aside now. Very difficult to short when market, at least some pockets, are making new all-time high. All the market ETFs have trend line support. Total View has trend line support. Megacap Custom Index has trend line support. Very difficult to short. At the same time, we can see clear weakening under the hood from market breadth across the board. We see the irrational exuberance Hindenburg omen coming one after another. I would not like to continue buying. I should say I'm okay to short for shorter term periods. I'll probably look at some of those trades that I took. But overall, for swing trading purposes, these videos I tend to make more focused on swing trading, neither day trading nor long-term investment, though Q can be used for that. These videos are more for swing trading, and for swing trading purposes, I'd like to stand aside. Review of last week's trade ideas. I identified two stocks, two energy stocks, and both of them were far from recent swing high. So I said that I was not very happy to short them using stocks. I also said that if they go up, this is CVX, one of those, if they go up, make a lower high and come down again. That may give the fast trend following short setup. On Friday, we have a down move after higher open, but it is still in green color, bullish color, so that did not allow me to short. If it comes down now so much that it is close to trend line support, then even if I have a bearish flow candle, I'll not be able to short because the trend line support will be too close. On the other hand, if it comes down little bit, maybe here on Monday or Tuesday, and then the flow color changes in daily, weekly both, then I may be able to take a short trade. But that may or may not happen. I'm thinking about the support from trend line, so I may not be able to short it unless the support is broken. And by the time support is broken, again my swing high may be too far away for me to be comfortable to take the short trade using stocks. So I'm going to watch it. And the other one also in energy sector that I shared was KRP. And this was unlike CVX because this was already in a downtrend. 1, 2, 3, 4, 5. So I identified it here, and here also it was bit far from recent swing high. I was not very happy to short it at that point. I did try to short it during the week. I don't remember either Monday or Tuesday, but it was going against me, so I closed it with very small profit, almost break even you may say. I didn't try to short it again. However, here I have what I suggested in the last market recap. Whenever the swing high is far from the signal day, remember last week it had a breakout short setup. If I go back to the historical chart, this is when I shared KRP along with CVX last market recap. It had a trend line breakdown short setup, but the swing high was some distance away. I suggested it could be traded using options verticals if options are liquid enough. I did not try that. I tried to short it using stocks but exited it with very small profit break even as it was going against me using intraday charts, of course. And what I suggested in the last market recap for both of the stocks, I would have liked them to go up little bit and come down, give me a short setup where the swing high would not be so far away, and we have that in KRP on Friday. What does it mean? Last week I had a breakdown short setup, but I was reluctant to take it because stop loss would be far away using Q techniques. On Friday in the same stock, I could get the short at a higher price, more lucrative price level, and now the stop is narrower. So this Friday would be a good time to short it. Let's complete, if I came here, let's complete the 360 degrees analysis as of today. Fundamentals may or may not change much, may change, valuation may change, a dividend yield may or may not change. Yes, this has huge dividend yield, 12%. So this also shows one thing, that I do take sometimes trades based on dividend yield, but that's dependent on risk tolerance. 12% dividend yield is huge, but the stock may drop much more than that. So it is one thing to just look at the dividend and buy a stock, but it is more important, in my view, is not to just look at the dividend, to see whether one is really able to hold on to the stock longer term. Dividend yield is still there, but the stock is not doing well relative to CVX. Q fundamentals allows shorting because it has negative earnings growth. Insiders are not buying, selling. Came down on Thursday, Friday. Earnings is not steadily positive, negative in some periods. Last 12 months is negative. Financial year is negative, though last quarter is positive. In any case, it has negative earnings growth. 83% stocks in the peer group, oil and gas exploration and production in energy sector, came down on Friday. That is bearish, and if I look at the relative score of the industry from QH, completing the 360 degrees analysis, it is flip-flopping. This is what is showing flip-flopping. Deep magenta, cyan, deep magenta, cyan. That is showing flip-flopping. Even acceleration huge, deceleration huge, acceleration huge, showing flip-flopping. Well, whenever I see something like that, I fumble, I pause, even for a second or two. Usually I tend to avoid trading those. There is something not right about the industry scorecard. I would like it to steadily go down, either in score or in acceleration, deceleration, which is pace. I would not like to see this kind of flip-flop. When I see that, though I like the trade setup today better than last week, fundamentals are okay for shorting, I would not like to choose it as a short setup this week. Anything that makes me uneasy, I don't like to trade that. Need confidence to be able to take the trade and let it play out till it's closer. So those were two trades. I didn't trade any of them much, only KRP exited with very small profit. Would not like to enter them right now, because they are both in energy sector. Energy is probably flip-flopping. This week's trade ideas, I would not like to share any trade ideas, but I did introduce a new chart layout on Q Global Metastock last week. Let me make good use of that layout to compare two stocks, and again you decide which one, if any one of them, you would like to short. If your market view was clearly bullish or bearish, probably it is not clearly bullish now for anyone, at least not for me. I'm not suggesting buying any stock, but let's make use of the templates. Open the template first, and I will show you two stocks, compare them, contrast them in different industries, of course. Use 360 degrees analysis and see which one you would like to trade, if any. In a normal, what I mean normal is when you have a clear preferred trading direction. First one is PAYS, pay sign. Let's open that. Friday the market was very weak other than mega caps. Finder technical breadth was very bearish, sector industry stock breadth was bearish, but this stock is outperforming not only on Thursday but also on Friday. Thursday, Friday, both it went up right from trendline support. It was inside a triangle, it also broke out of the trendline resistance. weekly turned more bullish, though the color is still red, magenta. That is fine. A breakout setup can be taken in a declining stock. Breakout is a setup that can come in a sideways move, it can come in a downtrend, it can come in an uptrend also. So we have a proper breakout setup. And as I said, let's make use of the last template I shared, a new template I shared in the last market recap. It has 3 directional forces. Not only breakout, 3 directional forces, and in terms of momentum, it has 4. It is also inside a squeeze. That's good. Then let's read the signals. I know the chart, you probably know the chart, but if you are using Q Global, it's not a bad idea to open the commentary. And if you are having multiple monitors, probably you all have more monitors than I have, you could move the commentary on another monitor so that the charts are not hidden. But or you could pin it to one side if you wanted. There are many ways to pin it. Auto hide is also available in Metastock, but let's just read the bullish directional forces. One is fan out, one is flow, and one is breakout from trendline resistance. Here probably going up from trendline support as well. And if I click now on the momentum chart, it will read the momentum chart in the commentary. The 4 signals are Bongo bullish, Kahuna bullish, Mobo breakout, and PSA reversal. This is looking good for me, at least in terms of technical analysis. Am I going to buy this? No, because my market level view is not bullish, but this is just an application of the complete 360 degrees analysis. Let's look at PAYS, this stock PAYS fundamentals. Technically, I think it was okay to buy. Look at PAYS technicals, fundamentals, I mean. High 100% earnings growth that allows buying. It is a profitable company in terms of earnings per share. Earnings date is not nearby. What I don't like is that majority of peer stocks came down on Friday. That is not unexpected because other than mega caps, the market was quite weak. If I look at its relative score, it means the industry's relative score. This is looking weak. It's not having enough acceleration, not showing enough strength, so I'd not like to buy it. When I look at the technicals, I like it. Fundamentals allow me to buy, but industry strength does not allow me to buy. Let's move to one more stock. Let's see if that allows buying across the board. That is a solar industry stock. I think JKS is Jinko Solar. Yes, Jinko Solar, JKS. I chose these two because both of them had significant directional bullish forces. It has a proper trend following long setup. It is uptrending, higher high, higher low. Weekly has trend line support, bullish backdrop. On Friday, though the market was down overall in Edge and Finder, the stock went up, outperformed the market. It has 3 directional forces, 4 momentum forces in the bullish direction. Let's look at the commentary to read them out. The directional bullish forces are fan out, flow, pressure. You can see the stock and the date here. So 3 directional forces, and in terms of momentum, 4 bullish momentum signal, Bongo, Kahuna, Mobo breakout, pocket pivot. So again, as a technical trade, JKS allows me to buy trend following, not breaking out from sideways move like in case of PAYS, but this is a trend following long setup. Let's look at its fundamentals. JKS. It has a decent dividend yield, 5.18%, undervalued, that allows buying. Earnings per share growth is positive for last 12 months and last year, but last quarter is negative. Again, majority of peer stocks went down. That is not unexpected because Friday was weak, but this stock bucked the trend. Now, let me explain one more thing. JKS is grouped as a semiconductor stock as well as a renewable energy equipment and services. But we know from our knowledge of the stock, even my limited knowledge, that this is actually a solar industry. So I am not going to look up the semiconductor industry scorecard. That will be misleading for Jinko Solar, JKS. I should look up the renewable energy equipment and services. So see this button, look up industry scorecard. Whenever a button has a shaded boundary, shaded border, like here, like these buttons, and also this button, like this button, they have two operations. One is simple click, one is shift click, not control but shift click. Let's focus on this button. If you shift click, it will look up the industry score for the alternate industry. If you do simple click, it will look up the industry score for the primary industry. Normally I use the primary industry, but for these few stocks where the primary industry shown by Refinitiv or Zenith is not representative, I look up the alternate industry. So one step way to do it is to do shift click from here. That will directly go to renewable energy equipment and services, or you could do click and then change to the alternate industry tab. Let me demonstrate both. I'm going to do shift click and it should take me to alternate industry score of renewable energy. It did that. It took me to alternate industry scorecard. It took me to renewable energy equipment and services. And here I have huge acceleration. So the industry relative score, the industry did not do very well. It came down on Friday, that is expected, but the stock outperformed, stock went up, and the industry relatively outperformed. So that allows me to buy. I wanted to compare and contrast these two stocks, 360 degrees analysis. When I looked at PAYS, it did not allow me to buy. And even before that, even one stock, the energy stock JRP or JPR, it did not allow me to short. But Solar, Jinko Solar, not JKS, Jinko Solar allows me to buy. Let me just go back to Vital. Now I am going to do simple click, not shift click. It should take me to semiconductor industry score, but that is not the right industry for this stock. It will take me to semiconductor industry score. Sorry, what did I press? Just to click, not shift click. Yes, it took me to semiconductor industry score in the primary industry tab. If I do click, that is also fine. I just have to now go to the industry 2 alternative industry tab, and the renewable energy score will be ready for me there. But it is easier if you remember to do shift click in those very few cases where the alternate industry represents the stock better. You could do a shift click on lookup industry score. So Q dives like that has many small features that I developed for myself to do the 360 degrees analysis easily. How to remember that? When you get the DIVES program for the first time, what I suggest for all the DIVES programs, be it Edge or Vital, we are on Vital here, you see this question mark, that is the help. Black is help is disabled. So I am clicking something, but it is doing the action without telling me what I am doing, what it is doing. When you first get DIVES program, I suggest you make it green and click through all the buttons one by one. It will show what the buttons do without doing anything. So if I click this gear icon, it will tell me look up industry scorecard from Q Edge. Click OK. It does not do anything, but that way I familiarize with all the buttons on all the tabs on all the DIVES programs. When I am ready to operate them, I click the green question mark again, it turns red, not black yet. Red means what? Now it is going to show me the message and also take the action. So first, when you get DIVES program, familiarize with all the buttons, just click through all of them. No need to try to remember. Then when you start operating, make it red for 1 week or 2 weeks. So when you click through, it will show what it is doing. And also all the icons are representative in a way. So cloud is seasonality. This is technical finder. This is gear is industry scorecard. So I'm going to click industry scorecard lookup again. You will see it will show me the help message and then take the action. Red is that. Click lookup industry scorecard from Q Edge. So from Vital it is going to go to Q Edge and show me the industry scorecard. Now on Edge I did not switch on help, but let me do that. Turn that to red on Edge also. Let me go back to Vital, do the lookup industry score. It shows me the help message. Click OK. It goes to Edge. Now if I go back to Vital, I click this button and now on Edge also I have turned help message to red level. So now it will show me what it is doing. Drill down from industry to Q Vital stocks. But I did not highlight any industry, so it will just go to Vital. Let me go back to Edge. If I highlight one industry, here only one industry, let me refresh. When I refresh, it says refresh views and refreshes the data from cache. So it shows the help message and takes the action. Let me do it very quick top-down analysis. The strongest, let's say 1, 2, 3, 4, 5 industries. Now I'm going to click the lookup stocks scorecard button, and you will see because the help message is now red level, it will tell me drill down from industry to Q Vital stocks. And now I have selected industries. So now it will go to Vital for those few industries. It didn't do. Let me do shift click. Because this button also has a border, there is a reason for that. I do shift click, drill down from industry to Q Vital stocks. Still nothing. Okay, let me reset here. Reset all smart filters. Go back. Shift click, drill down from industry to Q Vital stocks. Yes. So some filters were applied already on the Vital scorecard. That's why it was not able to filter for those, but no problem. If you are new to Q Dives, I suggest you do like that. First familiarize with all the buttons by turning it green. Click through all the buttons and then start using it in red level so that it shows the message and takes the action. And once you know all the buttons, just turn it back to black like I do nowadays. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples I'm quite confident shows, there is no reason not to do that. trade profitably. Thank you.